Now, the whole time I've had this channel and hypothesis, we've been saying that gradually and slowly we should expect to see labour market deterioration, and that we typically see these lead-in phases before the accelerative pop to the upside, and it's the accelerative pop to the upside that marks recessionary periods. The whole time we have been hoping and praying we could get a rollover, we could get a trend change, we could get some kind of sideways consolidation, anything other than what we currently have at the hard right edge. But it is impossible for me to look at this and say anything other than our fears that we would gradually see this consistent and persistent trend of labour market deterioration continue to be validated in real time. This is only getting worse, it's not getting better. And thus, I don't think any of the people that think we can just somehow swerve a recession, or that this is a 5-year cycle now, or that we're entering a re-acceleration period, I don't think this is what the jobs data is telling us. Okay, the 6-month moving average continuing to deteriorate in real time. And the SAM recession rule has just doubled again for November's readout, okay? It made a low of about 0.1, and now we currently sit at 0.43. So it's interesting that they allowed this thing to roll over and look like we were potentially going to swerve a recession here, only to then stop releasing the data as it's starting to double and double again. Now, this is not yet triggering a recession warning, but again, it's not going to take much here to just see this thing push a bit higher. And then remember, once we get a gap of 0.5 percentage point, relative to the minimum of the 3-month averages from the previous 12 months, that is the signal for recession.